Good to have you, Doc. We'll come into the post-election matters, especially when it comes to the economy. But let's start from financial literacy. Over some time, we've seen, people preaching the gospel, if I should say, of financial literacy. But I want to pick your thought on the role policy and regulation has to play when it comes to financial literacy in our space.
The first and foremost responsibility for investor education or public financial education falls on the regulators. And the regulators here, I'm talking about Bank of Ghana, I'm talking about National Pension Regulatory Authority, Securities and Exchange Commission, and NIC. These are the four principal regulators that we have in the country, and to a large extent, Ministry of Finance. So in their mandate, there are provisions in their mandate that they have to educate the public when it comes to issues relating to finance. And to be specific, what relates to each regulator in terms of the regulator's industry domain. So Bank of Ghana regulates the banking and specialized deposit institutions. So anything that is of interest for consumers of financial services within the banking space is the responsibility of Bank of Ghana. When you go to pensions, it's National Pension Regulatory Authority. Securities, market, mutual fund, investment falls under the domain of Securities and Exchange Commission Ghana. And when it comes to insurance, we are talking about National Insurance Commission. Having said that, from the policy point of view, the financial institutions themselves also have a responsibility because they stand to gain the most if we are able to get a large segment of our population being financially literate.
Non-performing loans has been one of the biggest problems when it comes to our financial sector. We've had banks suffering as a result of that, also savings and loans companies. I remember recently in one of their annual general meetings, they made mention of the fact that teachers, nurses, and basically public workers do abscond to other parts of the world with these monies being borrowed from some of these savings and loans companies. How do we sort of get our head around this? What's the way forward?
So long as you provide credit in any form, as a bank or even if you are selling normal tangible goods and services and it's on credit, you will have the problem with non-performance in terms of loans or credit. So once the economy is moving more from cash-based transactions to a credit-supported economy, we'll be confronted with non-performing loans. But the issue then is the high level of non-performing loans. That clearly shows that we are having challenges and difficulties in loan management from the banks. And that will start from when the loan request is made by the client. The process that the client will go through, the before loan process, right? Then the after loan process. What do we do? And how best do we manage the entire process so that it will be successful in the sense that the loan will perform, meaning that the borrower will end up paying for the facility. So we need to look at the entire chain, not just after the loan, but even before the loan is given. What are we doing within that space? And what measures do we have, not only the bank, but what measures do we have as a country to deal with before loan and after loan extension process so that we can deal with the non-performing loans? One thing that we can rely on is the national identity. You see, the national identity is one particular unique identifier that if we are successful as taking a stronghold on it, it will help us to know who is who. And if you're able to link all our other economic activities around the national ID, then we have solved a big problem when it comes to the area of non-performing loans. In that case, you cannot take loan from one institution and then disguise yourself and go and take another loan from another institution. There will always be a trail on you because your unique identity is who you are. This leads us into the discussion of the credit scoring. Once we start building up this culture of credit scoring, right from the universities or let's say the tertiary institutions, young adult level, and then you have your credit score, you have a score, it will be your responsibility to maintain a good score. Because the higher your score, the lower the rate at which you are going to borrow. So everybody will have a unique identity that mimics his or her behavior. Every business will also have a unique identity, which is a credit score that is going to mimic his or her behavior as a borrower. So in that case, if you go for a facility and then you mismanage the facility, it will affect your score. It will affect your next loan rate. If you're an individual and you go for a facility and then you mismanage the facility, it will also affect your score. So your credit, the credit scoring system now will help us to model many of us in the formal sector and even the informal sector to be financially disciplined. What we have to do is to speed up the process of finalizing the credit score, maybe linking it up to the Ghana national identity, Ghana card identity, so that it becomes a unique identifier, and then I can be known and my history can be tracked. Even if I have to buy electricity, right, I need to use my ID, and how I buy my electricity should also give me a score on the credit scoring system. Water bill, how promptly I pay my water should also be calibrated into my credit score. Other things that I buy, if I'm buying furniture on credit, should also be calibrated onto the credit score. If we're able to do this, the entire system will be built on credit. And that credit system will be so robust that if an individual goes to a facility and is not able to pay, he can easily be tracked. And then we can deal with such bad borrowers, because the existence of the bad borrowers is what is hurting the good borrower. Because the banks sometimes find it difficult to differentiate between a good and a bad borrower, the banks end up charging a standard rate. And the standard rate becomes so expensive for the good borrowers, but less expensive for the bad borrowers. And that is what is resulting in these high NPLs that we are seeing. So we need to manage the entire loan process. What I mean is, before the loan is given, when the loan is given, and then after the loan. And the objective is that the borrower must come again for another loan.
But should that be the role of the regulator or the banks or financial, institutions themselves?
It's a responsibility for all. It's a responsibility for the regulator, the banks, the individuals, or let's say financial service consumers. We all have a responsibility. You understand? So we can't leave it on the doorstep of the regulator. We can't leave it on the doorstep of the financial institutions. All of us have a responsibility. From the central government point of view, we can use the Ghana card as a starting point. And let's quickly build the credit score around the Ghana card. And let's have that unique identifier when it comes to lending. Let's pull the data together so that before I even go for a credit facility, I'll be directed to go for a credit score. And I'm going to use that credit score as one of my, let's say, my documents to request for the loan. The banks understand what the score means, and I also understand what it means for me. So that when I service or I don't service the loan, it will then affect my next score that I'll have. And that will bring in some level of discipline. If we can start, we can even go back to the mobile money account and use our behavior on the mobile money account when we go for these mobile money loans as a starting point to start building the score. Especially for those who have not borrowed formally, we can use the mobile money conduit as a starting point to build their credit score. At the universities, those who have not come for loan before, we can also target them. If they have gone for student loan, it's also another area that we can use to manage or to start building the credit score. The point is that you must build the credit score over time. You can't just start on the ground zero. So we should start building the credit score over time. And as we build it and we educate the public, we'll be able to deal with these non-performing loans. It's not only about individuals. Institutions or businesses will also have to get their own credit score, which will also mimic their borrowing behavior. In the end, the credit score will help us deal with financial indiscipline within the space.